Let's see now how to filter the liquidity zones and how to use all these options we have up here. And so I now have everything deactivated, but what happens if I activate here what the box tells me? 100x, the graph will show me all those leveraged traders or retailers that entered leveraged at 100x in the market. That is to say, it shows me the liquidation points and stop loss of those people. If I activate the 50x ones, it will show me all those who entered leverage to the market with 50x, and the same if I activate the 25x. It will show me, see how the price is liquidating right now for all of those leveraged to 25x, and possibly when it reaches the end of the pool it'll have a small bounce, and also those leveraged at 10x. That in this case, notice that it is very away from the current price. That's why it doesn't show up, but if I go below I start to see all the leverages, the points of loss of those leveraged at 10x. What is usually recommended? To have everything activated. For me to have insight in macro, all possible points of loss to where the price is going to probably go. Remember that the liquidity zones work like a magnet. They attract the price. That is to say, I have to be clear about where the price of all the leverage points will go. But what happens? Look how practically all the graph gets painted. Absolutely all the graph then. So that's where we have to define a volume. Look that here I have defined a volume greater than 2 million. We say 2 million. In the form of practicality, it's just a reference because we do not know if those orders that entered have already taken profit or they are going out to break even. But we are going to use the denomination in millions as reference. Then if I put 2 million, you will see that as you hover over. Example, let's come here. And we're going to stand on this line, on this lone red line. Look up here, it's going to show the description in millions of how it is composed, that pull line. If I place myself there, notice that he second such a 52.9 million that goes from a price range of $55,075 up to $55,099, and as it is made up that total of 52.9 million, and I'm reading it up there, look. Leverage to 100x and only 0.2. Minus 1 at 50x, 3.6 million, at 25 by 49.1 million. That is to say that the pools that they are dominating in that pool line are mainly the 25x ones and 10x. There's no liquidity at that point, then that way. Notice that it will always show me pool lines that in the total 76, it says 53.5, 52.9. Sorry, my mouse had moved. Notice that the total in 52.9 will always be greater than 2 million. Because of how I have it filtered here, what happens if we go to a very small pool, for example this pool line here, that the total is 2.4 million, which means that it is greater than 2 million as I'm filtering it. So why is this filter of total volume for each pool line important? Because if I just leave it only greater than 2, you will see that it is plagued of liquidity everywhere. That is normal because permanently in all the price levels are entering orders to the market and they generate different lines of liquidity, but we're off to concentrate ourselves in the areas where there is more liquidity, so that is where this filter helps us to say, okay, good. I will see first the pools greater than 15 million, for example. That's where the graph gets cleaned and I see with greater clarity where are the pools with the most liquidity. So I understand now why the price reached up to here. It swept this pool. It bounced. Now it's going to the zone with greater concentration of liquidity. Look, that it already had a little bounce. It swept. Now the zone with the greatest liquidity of the 25x that is bouncing. Remember that the colors of the liquidity zones is a heat map. I repeat this again and I say it in all the classes. It's a heat map. where there's more liquidity, and the coldest areas is where there's less liquidity. The green and blue ones. As I go moving the graph, the colors will always change, because the algorithm will always show of all the zones that I have in my window in sight. It will mark me with red and yellow where there is more liquidity. Notice that if I go down, these zones that used to be red and yellows became blue, because it shows me where there is more liquidity, where my window is showing me all the zones down here in the 53, which is the liquidity that got pending after it had the bounce up to 58,000 approximately. Then it is just for reference to know within where I have my window open of what I'm seeing, where is the zone most loaded with greater liquidity. It's just for reference. If I want to see specifically the description, remember that I move mouse over here and up here, it will show you the description in millions of how much I have in each zone. So we always use to take the zones with more liquidity as entry points and points of more volatility and rebound. Well then, if I mark greater than 15, as we had previously marked, I have clearer areas and areas where I see that there is less liquidity. For example, this black space left in 58,150 approximately, where, well, I can say if I operate the rebound on this zone, I have an area where I can put my stop loss. So for that, one always goes to look for the area with stop loss where there is an area of no liquidity or with less liquidity. In this case, there is an area with less liquidity, because I know that if I put greater than 5 million, I will see everything with sharpness. This is a little white blue that if I run the mouse over it, you will see that it tells you a total of 12.8 million. But if I put greater than 15, well, I have an area compared to the rest. It has less liquidity, so I can get to place a stop loss in this area because there is less liquidity, and I can look for a rebound when this little zone finished to liquidate, that is, concentrating here. I could have done it the same way when I proposed a larger entry in. In this case, for example, if we put greater than 10, I come here and I say, okay, good, here is an area with less liquidity, so I can start to think about a short entry. For example, in the area where there is liquidity and at the end of the zone, to partial entries and a stop loss in this area because there is less liquidity. So you use it to know where are the areas with greater liquidity or less liquidity for this type of filter. You will see that the strategies depend a lot of how it is filtered, because, for example, let me delete this. For example, this zone of 25 buy, I can't position myself or look for a very clear entry by filtering it greater than 10. That's where I have to, for example, greater than 25, and I see more clearly the wick of the price gets to the end of the 25 zones, or more than 25 when they are all active. And that is precisely because the zones of 25 will always be more loaded than the zones of 100 and that the zones of 50, because the price always takes longer in going to look for the zones of 25x. The zones it goes to find faster are the ones of 100x that it liquidates all the time. Notice that if I put higher than 2, only the zones of 100 buy, you will see that it liquidates them all the time. 100x zones get created. It liquidates 100x zones, it liquidates and rebounds. It liquidates and it bounces. It liquidates and it bounces. Is permanently liquidating the zones of 100x. So a lot of liquidity doesn't get created, because for it to form a lot of liquidity volume, it exactly needs a lot of market orders to come in. Then it needs a long time filling that liquidity zone, which is what happens with the 25x zones. The same with the 50x zones. They will have more liquidity than the 100x zones. That's why as I move away. In leverage, I mean, as I reduce the leverage will be further away of the current price. So I need to increase the volume. In this case, look at how it respects it, and this is what we teach in the trading course. How to trade the liquidity zones of 25x, filtering them precisely. Look at how it's having the rebound. Exactly now, it reached the end of the zone and it's bouncing there according to the rebound strategy that we use for the zone of 25x. If I go to see the 50x zones, okay, I'm going to have to not filter higher than 25 because notice that practically very few zone lines appear to me and I can go there. Higher than 15, for example, look at how when I go higher than 15 I understand why in this fall it liquidated the 50x zones and it bounced, but if I go and I give it a little more liquidity, I see how it got to the end of the zone and it bounced. So see how it shook the first half, it had a little rebound and then a new line was formed that already had been increasing of 50x. It liquidates it and then the price bounces. So we have a fixed way to filter the zones by leverage? No, because it will always depend on the amount of volume that is entering the market. There will be times that, for example, these zones of 25x that we were mentioning down, hooray, most of the times I'm going to filter it higher than 25, but what happens if the volume in the course of the range is being little? Imagine here is the volume below and it's being below average. Well, it will take a long time to form zones higher than 25. Higher than 25 million, so I can go and see zones greater than 20 of 25x, contemplating the rest of the liquidity zones also that they are forming the rest of the leverages as it goes down. It puts in leverages in 50x and 100x, or I can also filter higher than 15, for example, and we can see how still there is some liquidity down here and you can still see a second wick to finish to sweep though zones of 25x with a smaller leverage. But what we do know is that as I use a smaller leverage, the amount of volume has to be larger, because what I am speculating is that the zone is more loaded in millions and I want to know more precisely how far the price may bounce. Another way also that these filters allow me is okay if I am entering, for example, in a rebound in this zone here. Where do I place my stop loss? Because if I have Fideler older than 25, notice that I have liquidity zones below. If I filter higher than 25, notice that here I had an area which is to place my stop loss. It could be a zone with very short stop loss, but the risk is high because it's very, very close to what would my entry be, which would be at the end of the zone. Reduce risks. What I should look for is below the following zone of 25x. But if I want, even then, notice that the stop loss still is very small, 0.8%, and this can be speculated at quite considerable rebound of the 25x zone. So if I want reduce the risk, what I can look for is to filter greater than 10, for example. So I'm going to be where there is a lot less liquidity and I place a stop loss outside of the zones, even greater than 10 million. What am I doing there? Well, if there is a wick that will even sweep the 25x zones with a volume of 10 million, which is a small volume, that is not very considerable. Well, I can make sure they don't touch my stop loss if the price can get here and bounce, and there I do look for a risk rigor of 1 to 1. so it helps me to take into account the smaller volumes to precisely always place my stop loss on the outside of the liquidity even when the zones, they are very small. Another option that we have here is the zone group. The zone group is usually grouped. When it is in group 1, all the liquidity is going to get together in $5, and if it's in 5, it's going to be those $5 times 5, which means every $25 the liquidity will get grouped. This means, for example, these zone lines. Notice that if I stand there, it shows up there to the right. 56,350 to 56,374, that goes that range of pull zone. Notice that they are $25. That goes from one price to another. That's what this is grouping. To make things easier, use it always one-to-one. I mean, every $10,000. One leave of blue goes. Since we are in 50,000, it's 5. If we were in 40,000, it's 4. If we were 30,000, it's 3. And if we were 20,000, it's 2, etc. So, that for the moment. We always leave it standard. How we defined it. We also have this mode in which I can set only the liquidity. Notice that now it is at 0, that is to say, that it will show all the liquidity in the market, but I can ask it to show me the liquidity that entered in the last 24 hours only in the market, so that's where I come to the last candles, and I'm going to see the liquidity greater than 10 million of the 25 by 50 by 100x leverages that entered in the last 24 hours. This is what went in the last 24 hours in the market. If I choose less volume, you'll see that more liquidity shows up. Why this is useful to me? Because there are strategies when the price is in range mainly that allows me to see the most recent liquidity that entered the market, and when one is in range, it helps a lot to operate all these spikes in which the price moves. For example, if I go to the zones that were formed in the last 8 hours, you are going to see that it's going to show me this. I can deactivate it. The 25x zones, and for it to show me the 2 million zones, of course very small because they don't get to accumulate so much, and it sweeps them quickly, and it will show me the freshest liquidity, the most recent liquidation points and stop loss of recent traders who entered in the last 8 hours to the market when it is in range. Notice that if I come here and I stand in these last candles, it will show the liquidity that is forming in this last candle that I see on screen, and if I go, for example, to this last wick here, it will show me the liquidity that was formed from this candle before the last 8 hours. Notice that when it is in range, this starts to make sense of why the price goes to one side and to the other when the price is in range. Notice that it formed 100 by 50x zones. I turn off the 25x because it doesn't have much sense. The 25x are always far from the price. It's when it breaks a range. Instead, the zones of 100 by 50x is what it does all the time. When it's in range, it goes and it liquidates. I understand why this wick came up to here. This peak had it there and it bounces. There's more liquidity building up below. And so I understand why here there is a little wick. It liquidates the 100x and it bounces, and so permanently. It goes back up, and what does it do? See how the wick goes precisely till the end of the zone and it bounces, and this is given permanently on the market all the time. Every time the price is ranging, it goes to sweep the fresh liquidity. So this gives us a giant advantage to operate not only scalping but to know if we are in a position in swing and we see that it's going against us. Do not despair and rush to close the position or to reduce it because we are understanding why the price is going up or down during and while they are ranging. So well, that is an option. I want to say hello to Martin Duarte, who is a specialist, using this type of filter too. Use the recent liquidity, that is, entering the market, and makes it a super fast scalping, that is, constantly going in and out, catching those ups and downs, permanent in the market, and that the community already learned from him and are using. That of course you can learn from the Discord community, where users are permanently operating there, those super fast entries in the market. We are going to leave this in greater than 10, more or less, so we can see the big picture panorama by activating those of 25x, and that's how I usually use. And well, another option that we have here is to change the colors of the zones. Here, you can choose different colors or even customize them with the color you want. This is just so the zones disappear and to make them come back. This is to change the theme of the screen. The appearance can be white, it can be black, so you can go change it there, and even if you want, you can come here to settings and you modify the colors like you want them. In this case I will leave it all black, even the lines. This type of option you surely know how to use it, because it is the same as TradingView, the same as this whole section in the left side, where you have the whole drawing panel, and positions are deletion and all. The tools of TradingView, you have them here in options. Here you have to select the timing. Normally to do scalping we use 5 minutes to evaluate the market. In tradition, we are going to a 1 hour chart, and if we position ourselves here, we click and we delete. We can also place the Ethereum zones, where also we can select, and it will show us how it is coming. Notice that ETH always has a similar behavior to what Bitcoin does. And well, in this case, we delete again and return to XBT, which is Bitcoin 513. On the other hand, here you have the option to save this your graph. You can rename it, save it, or load a new graphic. These options you surely know them already. And finally, you have the option of indicators that can add up all the indicators that you want, that you normally use for free in TradingView. Or if you hit TD on the zoom, you could look for our own indicators that are exclusively from Trading Different, where we report the liquidations from all the exchanges, the liquidations with collateral from N stablecoin, open interest reported by BitMEX, the differential orders by N sell, and the trend if, which is a new indicator, where there is a specific video talking about it. If you double click it, you will see that I have 5 indicators below to see what the market is doing. There is even an exclusive video that talks about each of these indicators and how to use them, and how to filter them too. In summary, what's the way to use this zones filter? Well, there is no single and specific way. It is always according to what is what I want to see in the market. If I'm looking for scalping positions, I have to get much closer to the price. I have to activate the zones of 100x and 50x. See the rebounds there? I already know that. For the zones of 100x and 50x, I have to use a smaller volume. So I go to 5 million to understand each of these rebounds. Why it stops here and it has a small rebound, why it stops there and it has a small rebound, etc. So if I want to make one intraday position or swing, okay, I go to the zones of 25x. I put more millions to see where to position myself. In this case, I put more than 15 million, and I see that in the big picture. Notice how the price was in range. It was maintaining a base and suddenly it goes down. Well, we know why it goes down, because is liquidating the positions of 25 buy, and it's having a rebound there. This happens permanently in the market. And what happens at the top? Well, at the top, a lot of liquidity got accumulated, both 50x and 25x. If I move the mouse, notice the amount of 25x that there is, 29.5 million, 29, 19.9, and so if I go to the top, and so what is most likely? That the next time it tries to break the level of 59,000, this gets rapidly accelerated, because there is a lot of liquidity here and all the liquidity points and stop loss will jump, and they will accelerate the price. There is a specific class in the course where I talk about the mitigation engines and why the price gets accelerated every time that it gets to the zones. So that's very well explained there, and you can understand why there is a high volatility and acceleration within the liquidity zones as it happened here. For example, note that into candles of 5 minutes the price accelerated and it dropped more than 1.3%. Only in 10 minutes. And it has of course a high volatility, it go down and it even bounces more than 0.7%. So that's what I will consider if I am looking for positions or investments by spots. Okay, then I can go and activate zones of 10x and see where there is more than a 10x liquidity to make my purchase positions, for example. So I come down here and I see that I can go to a 1-hour chart. So you can see a macro context, and so it's understandable. And of course, since I'm going to a smaller leverage, I have to increase the volume because I need higher volumes or greater than 40, and you will see there how the zones are loaded, and it takes a minute because of the amount of data that they are having. That is, all these volumes that are quite large. They have a very large amount of data. Very important of all this time in which the price is ranking and accumulating, so it takes a little bit to load. But so, instead of buying, for example, if the price now goes back to 54,000 or 53,500, I wait because there are better purchase positions in areas where there is liquidity of 25x and 10x. Then see if I move the mouse in that same point. Leveraged at 10x there is 74.2 million, a total of 84.0. You can see it up there, 84 million. So my purchase area is 637. In this case could be in the 51,500, approximately a first partial purchase and a second purchase partial in the 49,100. So I'm analyzing the macro scenario to make positions in swing, and where would be my selling points. I go and I position myself again in the 25x and 10x zones that were formed above, and at 63,000 could be a partial profit taking point. Even if I go higher, I will see that new liquidity is being formed here, up, which would be the break of the 70,000. So it will be useful for that. Summarizing the filter modes. To see the liquidity zones are going to be acquired with practice. However, we have specific strategies, precise premises and parameters of how to filter the zones, to know how to operate each of them. In this case, we can leave it at higher than 25, so that the whole currency can be seen. But, well, you will get this with practice. You already know more or less how to filter it, and in the community, we are permanently suggesting and adapting the shape based on the volume that's entering the market. The best ways to filter the zones. To be considering, where are the loss points? All the traders that are entering the market. So okay friends, that is everything.